With interest rates creeping now back up into the sixes, inflation still roaming around the United States, and housing prices still correcting, is this a good time to buy, sell, or invest in real estate, especially right here in the greater Boise, Idaho area, or better known as the Treasure Valley? The answer may surprise you. In this video, that question will be answered and much more, as we are going to go over, review, and analyze what happened in the real estate market right here in the Treasure Valley for January of 2023. And we're going to discuss what to expect in the upcoming months. Stick around to the end of this video. There, I'll be breaking down Ada and Canyon County statistics and how to succeed right here in the Treasure Valley local market in real estate, whether you are buying, selling, or investing. Welcome to another episode of Mikey's Monthly Market Updates for January of 2023. I look forward to being your guide. Ada County, you're up. Let's go. Welcome back after the quick break, everybody. And just real quick before we do dive into the statistics for Ada and Canyon counties, of course, my name is Mike Petras with MPRE Residential, powered by NextHome Treasure Valley. And of course, if you have any further questions regarding anything within this video, or you are looking to buy, sell, or invest right here in real estate in the Treasure Valley, feel free to reach out to me. You can go ahead and get my contact information below. Please feel free to shoot me a text, send me an email, more responsive to those two as well. And please comment below. Would definitely love to hear what you have to think about what's going to happen in the real estate market right here in the Treasure Valley coming up in the months to come. Also, please hit that subscribe button, hit the notification bell so that you're constantly in tune with the videos that I do come up with. But let's go ahead, let's start diving into the data. Let's break it all down. Starting off with Ada County, and of course, according to this graph, the market correction continues. As we can see, the median home sales price has now dropped down to $487,495 in January of 2023. Obviously down from the $602,250 at the peak of the market when the market correction began in late May, early June. And we are now down officially in Ada County since that market correction, 19%. Since January of 2022, when the median home sales price was sitting at $540,000, we are now down 9.7% since that time. And reaching all the way back, we have now really kind of hit median prices that we have seen since 2021. And really, we are still up a tick at 1.28% since May of 2021. But we are continuing to maybe still kind of go down. But are we going to start leveling here? Let's go ahead and dive into that, see what the graphs are showing us and be able to break that down. But before we do look at that graph, let's go ahead and take a look at the movement that we had since last month. Last month, we were sitting at 515,000, down now to the 487,495, which is down 5.34% since last month. According to this graph, our inventory is coming way down. And is that because people are reluctant to sell? Yes, probably. But is it also because we are still kind of at the seasonal swing, the quarter one, quarter four shifts that we normally have in real estate? That also does come into play. But you can see that the inventory for total single family homes is now really starting to encroach the buyer's demand of where we are at the sales. But most importantly, if we take a look at the orange line, we do notice that the pendings definitely shot back up. We do have ourselves a bounce. So what can we anticipate next month in our stats as we see the pendings start to basically kind of jump up in that aspect? We can see that the amount of solds for next month are probably going to jump up from what we are seeing this month. And if we can see the active inventory and the pendings basically kind of commingle themselves like we have seen in 2019, if we're looking back at this graph, what can we expect? Basically a stabilization or basically a general leveling in the median home price drops that we have been seeing for a while now. So in essence, with inventory coming down, pending is going to be on the way up, which is going to bring the total homes sold back on the way up, and potential intermingling. I really do start seeing stabilization coming right around the corner right here to the Treasure Valley. But with recent bump ups in interest rates, etc., can we start seeing a lull again? Well, let's go ahead and let's cover that towards the end of this video. Please stick around and I'll go ahead and give you my thoughts regarding that. But total inventory sitting right here in the Treasure Valley in Ada County is still sitting at 2.57 months worth of inventory, which was the same as last month. But if we take a look at this graph, when it comes to existing homes, again, we can see the same trend. We can see the inventory really coming down to the buyer's market. And if we're taking a look at the pendings, again, which is that orange line, we see the bump up. So what can we expect next month when it comes down to these statistics? We can see that the solds should jump up. And as inventory and the solds start kind of narrowing the gap, we can expect, again, stabilization and starting to look a lot like, the same kind of characteristics that we saw back in 2019, according to these graphs. So again, do I see stabilization right around the corner? I do for the Treasure Valley. For existing homes, the total inventory is sitting at 2 months. And basically, again, the same that it was last month. Not a whole lot of change. Now, if we're taking a look at new construction inventory, again, the same thing. Our inventory is on the way down. We do know that the builders have basically been retreating back to the pre-solds, and they've really kind of stopped making their spec homes. So that does help narrow this gap, plus the seasonal shift that we had. But again, pendings also made another jump. Do I see it commingling itself, just like 2019 and eventually a price stabilization here, maybe within the next couple of months from what I'm kind of predicting? Yeah, I do again see that coming around the corner. Now, have I really beaten that dead horse letting you know that I think the stabilization is coming? Well, I do. Well, we'll go ahead and we'll touch upon that with where interest rates are going again towards the end of this video. So please stay tuned. But overall, our new construction inventory is sitting at 3.4 months worth of inventory, which again is the same really as last month. The key is here is as the sales actually went down for this month, inventory was still declining. Next month will be a different situation as I expect inventory to still kind of decline, but the buyer's demand to start narrowing that gap. So like always, let's go ahead and play the game. Who is the biggest loser for January of 2023? Was it existing homes or was it new construction? And going ahead and looking at this graph, looking at the existing homes, we can see that last month we were sitting at $490,000 and we went down just kind of really a tick in the existing homes here in Ada County down to $479,800. And if we've been looking ever since really about September of 2022 when it was sitting at $500,000, we're really kind of stabilizing here in the median home price loss, but we still have gone down in the median home sales price. Since the market correction, we are now officially down 18.2% since that time. Since the first of 2022, we're sitting at $515,100 to today. We are now down 6.85%. And since last month, we are only down 2%. According to this graph, and if we're taking a look at new construction, boom, we took another big hit again. Okay, we really went down. Now, keep in mind, the last time that I did talk about this last month, really, new construction really defied the odds of what was happening in the market correction. So it was going up. The median home sales prices were going up past when the market correction was really affecting everywhere else. And really in subsequent I expected it to do this and start coming the other direction and relatively rapidly. That it has done. It took actually a pretty good shot since the $549,945 that we did see last month to today's $594,900, which was a drop from last month of a whole whopping 10% again. And if you remember from last month, we dropped about 11%. So it's been going in terms of the new construction. So if you're looking for a new house in Ada County, it's becoming affordable from what you were seeing back during the market correction. So who's the biggest loser? Obviously, it's going to be new construction, and that is what's going to affect the median home sales price and the total single family homes really for this month. Looking at the average days on market, again, boom. From last month, we were sitting at 68 days on market, which was, well above what we have seen back in 2019. But now we are sitting at 83 days. So really, when this comes down to its sellers, this is what you want to pay attention to, especially at the end of this video, to where I go ahead and give you the best strategies on how to sell your house in this market for the most money and the quickest amount of time. But right now, things are sitting on the market, and they're probably going to be doing so again until we really start ranging into quarter two, when the season starts picking up again, when we start seeing the days on market come back. But here is definitely one interesting thing when we're taking a look at the canceled and expires graph. We can see that the cancels are going down. Okay, and why are the cancels going down? Well, because buyers really are kind of returning. There has definitely been a bounce. And according to this graph that you can see that the loan applications across the U.S. for Q1 have definitely made a bounce. And if we're taking the pendings that we saw in the other graphs, we can see that the Boise or greater Boise, Idaho area, Treasure Valley, is definitely one of those areas that are still seeing that same bump, and you'll still see that in Canyon County as we get forward to it. So right now, buyers are returning regardless of where the rates are at currently. And the rates really have been hovering at around the 6% rate for some time. It's been the most stabilization that we have seen in the rates in quite some time. So that with home prices were where they're at, interest rates kind of leveling off, etc., and buyers returning, getting those applications and going out there and buying up properties, that is why I expect the cancels to be going that other direction. Plus, I'm anticipating, and what I made in my predictions for 2023, that the buyers that are coming out are the ones that were really not affected by the federal funds rate, by taking out credit cards, new car loans, etc., put themselves in a good position waiting for this market to be right. And honestly, is the market right now for buyers? Please stay tuned to the end of this video. We'll go ahead and we'll cover that too as well. But real quick to recap for Ada County, the median sales price for this month was sitting at $487,495. The total homes that sold was 454 homes, which is actually down 32.8% year over year, which is kind of letting you know, again, the buyers have been kind of ducking out of this market. But to pay attention to those pendings that we saw, because next month is going to be a different situation. And our inventory is sitting at 1,169 available homes for sale, which is up 165.1% year over year. And our days on market sitting at 71, which is, I apologize, really kind of weird because the other one said 81, this one says 71. Little differences in the discrepancy there. Either way, days on market, they've increased for this month of January of 2023 in Ada County. All right, Canyon County, it's your turn. Let's go through the stats. Canyon County, ruh-roh, the median home sales price is ticking back up, but is Canyon County starting to stabilize? Let's go ahead and get to that in a minute. Looking at the median home sales price for January of 2023, we can see that Canyon County is sitting at $395,445, which since the market correction of sitting at $476,500 is down 17%. And if we're looking since the beginning of 2022, when it was sitting at $424,900 to the $395,445 we got today, it is down 7% since that time at the beginning of 2022, since last year. But if we're reaching back into 2021 to find some comparables to where the median home sales price was, really back in April of 2021, we can see that according to this graph, we are still up 2.4% according to that baseline. So we'll just have to keep monitoring the data and see what happens with the median home sales price in Canyon County, but we could be starting our stabilization. Looking at the 6-month breakdown for total single-family homes in Canyon County, we can see that we actually went up a tick this month to $395,445 from the $390 that we had before. And really, we've been kind of hovering. We're still coming down, but we're ticking up. But you can, again, still see that the total single-family homes in the median overall sales price is kind of hovering and maybe starting to show those signs of stabilization. But we are up actually a tick of 1.37% in Canyon County in the median sales price since last month. Looking at the total inventory, much like Canyon County, and actually a little bit more in this aspect, is we see that the inventory shot way down, okay, and it's still coming down. The buyer's demand, the amount of solds have been trickling down too as well. But again, look at the pendings. The pendings took a bump and actually are now starting to commingle like we saw back in 2019, like according to this graph, when things were relatively cool and stable. So do I see stabilization turning right around the corner right here to Canyon County? Again, I do, much like Ada County, so we'll keep watching the data, but I'll go ahead and get to some thoughts towards the end of this video, so please stick around considering where interest rates are at now and what that could do to buyers. We'll create another low. Please stick around. But either way, I do anticipate the buyers, the amount of solds to increase, narrowing the gap as I expect the inventory to come down too. And really, I see that stabilization right around the corner. But the total inventory for total single family homes in Canyon County is sitting at 2.37 months. And that is actually down from last month. Looking at the existing home inventory for Canyon County, again, boom, inventory is way on the way down. Boom, we've got that spike in the pending. So we're going to anticipate the buyer's demand to pop back up, or the amount of solds, buyer's demand, to pop back up next month in February. And again, I see that those gaps just narrowing, and I see stabilization, possibly returning to our median home sales prices here in Canyon County coming up. Honestly, I just see it in the data. Existing home inventory, though, the overall months went up to 3 months worth of inventory, which is up since last month. But again, as I can just point out, that the inventory is on the way down and narrowing that gap. And if we're looking at new construction inventory, that actually went down quite a bit. We are sitting at 1.8 months worth of inventory, which is down almost by half of what it was last month in new construction. So basically, what is that telling me? It's telling me that they're not really building a lot of new homes. The pre-solds, they retreated back. There's not a lot of spec homes out there from the builders to be able just to go out and readily buy. But the inventory is coming back down to narrow the gap between the amount of solds. And again, we see that bump in the pendings. So buyers, again, are returning to this market, and we already have our commingalization really between where the pendings are at and where the total inventory is sitting in Canyon County. So do I see prices starting to stabilize, to the point to where the builders might be starting to take off some of their concessions now for you buyers? Yes, I can see that. Stick around to the end of the video. We'll go ahead and discuss that as well. But back to the biggest loser. Who is the biggest loser for Canyon County for January of 2023? Was it existing homes or was it new construction? And if we're going to go ahead and take a look at this graph, we'll start off with existing homes first. We can see that we barely ticked down in the median sales price for this month as compared to last month, sitting at 342 as to the 339 that we have today. So in existing homes, though, since the market correction began at 425,000 back a little bit before May of 2022, down to today, we are down 20.2% since that market correction. And we are down since the beginning of when it was sitting at 390,000 to today, down 13% since the 1st of 2022 in January. And then this month, barely down at all at 0.87%. New construction took a little bit more of a bump. So who's going to be the biggest loser? It's going to be new construction. And this month we are going in, we're sitting at 415,450 as compared to the 442 that we had last month, which brings us down 6% since last month. And since the market correction, we were sitting at 549,000 when that started hitting, really about May of 2022, down to today, which is sitting now at 24.32% down since then. And then if we're looking since the beginning of 2022, when the median home sales price was sitting at 465, down to today's 415, 450, we are down 10.65%. Days on market, and again, a big jump. And I apologize if you looked at Ada County. This is more than likely where I got the statistic wrong. I just kind of had and popped in what happened in Canyon County over into Ada County. But Canyon County looked like it was sitting at 73 days. Canyon County sitting at 83 days. Okay, so either way, our days on market are bumped up. So again, sellers, pay attention to the end of this video to where I go ahead and start discussing the best strategies to be able to sell your home in today's market. So I look forward to seeing you towards the end of that video, but we did bump up. But do I expect this number to come back down as we start getting back into the seasonal swing for real estate, like around Q2, Q3? Yes, I do. I see it coming on the way back down, but we'll go ahead and monitor this. And Canyon County, just like with Ada County, we can see that the cancels are coming back down. And why? Really because buyers have come back. Now, a lot of people are really canceling their properties. They're selling them. Okay, so we definitely saw that bounce. If you look back in Ada County, and I'll go ahead and include the graph, we saw a bounce in the overall applications that are happening with loans right now in Q1, which is really, really cool. It's letting you know that buyers are coming back. Plus, if we look back to these graphs, we can see that the pendings jumped up too, which is letting you know that buyers are coming back to our area as well. So I see stabilization, I see buyers returning, etc. But please stick around again to the end of this video. I'll go ahead and mention what is happening with mortgage interest rates right now and what we can go ahead and expect with that. So I look forward to seeing you there. Lastly, to recap Canyon County here, Of course, we were sitting at $395,445 for the median sales price, which is down 6.4% year over year. Our total homes sold for Canyon County for this month of January 2023 was sitting at 305 homes, down 20.6% year over year. Inventory is also up at 724. Well, but it's swinging back down, as you can see by the graphs, but it's up year over year, 108.6%. And our days on market is sitting at 83 for Canyon County. Before I go into the final thoughts and the best strategies on how to go ahead and succeed in buying, selling, or investing in real estate right here in the Treasure Valley, let's quickly talk about what's happening in mortgage interest rates, the 10-year Treasury yield, MBS, etc., and let you know really kind of what's going around the corner with rates and what to expect. Well, first off, last week, we saw probably one of the most grossly manipulated jobs reports that has came out in forever that I can remember. Well, there's one not too long ago, but this one, in my opinion, was actually really bad. It felt very, very manipulated. The Bureau of Labor Statistics, which is a government-run agency, decided to make a seasonal adjustment based upon the overall total non-farms payroll, and it shot way up from projected. And what did this do? This went ahead and scared the treasury markets, especially the 10-year, because the 10-year is the most closely related to the most popular loan, which is a 30-year fixed loan or fixed loans in general. So what did people do? They started selling off their treasuries. And what happened to the yield? The yield shot up because we know that when the price of the treasury bond goes down, the yields are going to go up to create attractiveness back to investors. But mortgage interest rates closely follow what is going on with the treasury yields. And to compound the issue, the next thing that came out was the ISM Services Index. The ISM Services Index magically came out from recessionary territory of under 50% to 55+%, which is basically telling the Fed and the markets that everything is just fine in our economy. Well, really, is it? I don't think so. But the markets did what they did, and when rates finally cracked within the fives, might have been the high five interest rates for a 30-year fixed, boom, they went way up into the sixes, and they are continuing to climb. Especially now as the CPI report that came out yesterday really kind of showed that there wasn't much change now all of a sudden to the disinflation that we were having over the last 3-4 months, and now put investors back kind of in a lull like, well, what's going to happen now? So what will happen with mortgage interest rates? More than likely, they're going to jump back up into the sevens, possibly and most likely, before data starts coming back around and to where investors start feeling comfortable to go back in there and invest again in the 10-year Treasury notes, to be able to bring down the yields, to bring down mortgage interest rates. So right now, expect them to go up right now. As of today, they're sitting at 6.6%. And I know you're probably going, oh man, really? They were coming down the other direction. But what I'm noticing though is that the rates really are staying around the sixes. They have been that way for a while now. They haven't been as volatile. This is the most volatility in upwards that we have seen in the last couple of months. Okay, so we do have buyers out there that still are seeing that the markets are probably starting to stabilize here. There's not much more total loss that's going to be coming through. So these buyers also want to take advantage of the buyer's market that's here before that starts to close. Because as things stabilize and say like, for example, new home builders start taking away their concessions, well, that's just one last power that you had buyers beforehand now that you don't have before. So it has that perfect opportunity to be able to time the market just right, potentially pass you by. Buyers, it might have. So if you are in the position right now to be able to go out there and buy, get in there and do it. Because remember, you're marrying the house, but you're only dating the rate. And the way that this is going, this is saying to the Fed with the way that numbers are being reported is that inflation may be entrenched at this point, which means that they might have to put the screws on to the federal funds rate even more, which will drop us into a recession. And if we get into that recession, and I already gave a very, very small warning towards or small chance of a soft landing happening anyway, but now if they're rattling loose, which they really kind of are, they're saying, hey, we told you so. We still are seeing these numbers. If they put the screws on even further, we can almost guarantee and certain that recession. But for you, as a buyer, keep in mind that when a recession hits, the forces the Fed to go ahead and loosen its monetary policy, and mortgage interest rates will come down. So I do invite you to go ahead and click above on the link and see my predictions for 2023, and this will probably come all into sync. To bring the point home though, I just kind of want to say, and I'm not one to scream conspiracy theories, but it just kind of seems really, really odd that as we start getting the disinflation over these last few months, for all of a sudden for it to switch, especially when things start getting better. It almost kind of feels that it's a kickback, against. And remember, inflation, the definition is there's too many dollars out there to buy up too little products. Goods have basically kind of came back online. And in terms of overall people getting the wage increases, etc., and them fighting against jobs, we already know that the tech sector is on the way down. Really, are these numbers really being reported correctly? And inflation really is just an additional unseen tax. So maybe the US government is just not done taxing us yet and wants to get a little bit more out of that $1,600 stimulus check that they gave to us. In summary, however, do I anticipate the higher interest rates to be able to drive out the purchasing power of some buyers coming up here in the future? It's not going to just happen overnight. It's going to kind of lag itself in. Yes, I do. And could we see a little bit more of a market correction from the stabilization happen to overall median home sales prices? Yes, we possibly could, as the buyer's market, people jump out because their purchasing power basically kind of got stripped away. I can't anticipate that, but do I think that it's going to be long-lived, and really kind of hurt stabilization that's here? No, I really kind of don't see that. So buyers, if you're in the means, definitely don't jump out, but do keep this in mind and keep your eye on the mortgage interest rates. All right, everybody, final thoughts time on how to succeed in the real estate market right here in the Treasure Valley if you're looking to buy, sell, invest, or even if you're renting. Let's go ahead and start out with buyers. Buyers, as I mentioned right now, according to the data and according to a lot of rumors, you ask basically any realtor and you see what's really kind of going on in the action in the data, especially when it comes down to the pendings, is that we can see the buyer's market returning. And if we took a look at that graph, in Ada and Canyon County, and I'll go ahead and just put it up here one more time, showing you that the loan applications in Q1 have definitely jumped their way up. So what is happening here is that buyers are seeing that prices may have come down about as low as they're going to go before stabilization, but they want to get in that window before they really start losing the power that they have in the buyer's market. And right now, if you talk to certain builders, you're even hearing that some of the builders are starting to take back away from the concessions that you were once getting. So if you're looking to time the market, it might have just passed you by a little bit. So it is time really to get in there if you have the means to go ahead and do it. Now, I know rates are high. You're probably like, oh my gosh, 6%, or almost close to 7%. Yeah, that hurts. But again, you're marrying the house and only dating the rate, and things will get better. The rates will come back down. If we do hit a recession, I've seen this many times in other videos, the rates though will force the Fed to have to loosen its monetary policy in order to recover the US economy, and mortgage interest rates come down historically. So when there, and even if they're able to come in for the soft landing, will take a little bit longer, but mortgage interest rates will also come down. So keep in mind, it might be a little bit before that happens and you will feel the pain, but right now you can go ahead and get in good, nice, decent price to come out here into the Treasure Valley. And again, you're marrying the house, only dating the rate. But most importantly, get in there while you have the power, while this is still a buyer's market, because I figure that this window is narrowing. Now, will there be maybe a little bit of lag coming down the line due to the mortgage interest rates, and maybe, a slight more tick in the market correction due to such as it chases some buyers out? Yes, I do, but I think it's going to be a short-lived deal. So should you bank on it and be like, well, can I, save another maybe 5,000, 10,000? I mean, it could be more. We'll just have to keep monitoring to the data. But I just kind of don't see that according to the data and how things are kind of intermingling themselves in the graphs, etc. So buyers, if you are looking to buy right out here into the Treasure Valley, if you're looking to come in from out of state, click in the description below, download my free relocation guide, so that way you're in the know before you decide to make the move. But also feel free to reach out to me. My contact information is below. Feel free to shoot me a text, email, comment below. More than happy to answer any questions that you do have. So buyers, I look forward to hearing from you. All right, sellers, your turn. Now, do I see stabilization according to the graphs right around the corner? I do. I see it. But, you know, mortgage interest rates, and if you were paying attention to what was going on in the buyer sections, they are on the way up, which could chase out some buyers, and we can see an eventual lag with that. And I believe that that's probably going to pop up, but not for a very long period of time. But again, sellers, there's still a lot of competition, even though your competition is really starting to narrow. But as the seasonal shift goes for quarter two, quarter three, you can expect the inventory to come itself way back up to, or back up, giving you more competition. So sellers, it's really key right now to properly price your home for today's market. If you're shooting for the moon, you're probably not going to get a lot of traffic, and you're going to see yourself doing price reduction after price reduction before you get the traffic. And again, buyers, even though it's not like a 2-week turnaround like we had a year and a half ago, you can start seeing some of those buyers just not pay attention to your house. So it is critical to go ahead and appropriately price and monitor the traffic. That is what your realtor should be doing when it comes to open houses, and just kind of get a feel for the traffic that's going on and make adjustments accordingly if you are priced a little too high. Of course, there are many other strategies that I can go ahead and discuss with you on how to sell your house for the most money and in the quickest amount of time possible here in today's market, and would be more than happy to discuss that with you. Feel free to reach out to me. Would love to set up an appointment with you to where we can go ahead and discuss those best strategies. It should probably take about 30 to 45 minutes total, but I look forward to hearing from you to discuss those strategies and get your home sold for the most amount of money and in the quickest amount of time possible, even in today's market. Investors, okay, this one's a little bit interesting. You know, of course, I think that stabilization, again, along with the buyers, is right around the corner. Sellers too, you know, are paying attention to this. I think that basically our prices have kind of almost bottomed out as much as they're going to. So I think there's probably going to be a little bit more flex in the next month or so, maybe just a tad bit, you know, before it really kind of stabilizes itself. Sure. And do I see, you know, again, buyers, if you're still paying attention to this video, do I see, you know, that lag from where interest rates are at now, maybe showing itself a little bit? Sure, I do. But again, I'm just overall seeing investors that the prices here are about to stabilize themselves, and they've really kind of gone down about as far as they've gotten. But if you're looking to rent and buy secondary properties, that is the one thing that the Fed is really kind of trying to more or less combat in the OER when they're comparing mortgages to rents, is they're trying to bring that down, because we know that when the home values do go up, OER it tends to follow suit to that. And that's what they're kind of looking at. So they're trying to get the rents to kind of turn the corner a bit and more stabilized, or even kind of come down a bit. So if you're trying to get, you know, maximum value for your rentals right now at a cheaper price, this is a good thing. And of course, you know, the more money that you do put down, if you are looking to get a loan for your secondary property, the better your capitalization rate is going to be. So if you'd like to know about capitalization rates on a particular property that you're looking about, let's go ahead and discuss, you know, how much you're thinking about throwing down, etc., etc. Talk about all the tools, and let's go ahead and let you know what the capitalization rate is going to be looking like for your potential rental. Now, of course, if you're in the flip game too, inventory has definitely come down. It's probably harder to find the properties that you are looking for to go ahead and flip out there, but they are there. Okay, the inventory did peak up, so keep what's going on. And you probably even have some of those people that are trying to sell their houses that aren't so in great condition, starting to kind of be like, okay, well, I'm giving up. Let's go ahead and make a better deal. So best of luck to you out there. And of course, if you are looking for flip properties, feel free to give me a call. I'm more than happy to turn around and see what investments are out there greatest for you. And lastly, renters, I say it every single video, you're paying 100% interest rate. Because you are paying your landlord to go ahead and do it. Now, if you are one of the ones that really hasn't taken out new credit cards, new car loans, stuff like that, to be really affected by the federal funds rate, and you've really kind of held on to your savings, you know, considering they're trying to strip it away from you, now may be a great time, because I really do not see the prices coming down much lower, if anything at all, for the stabilization to happen here. So now is a great time to go ahead and build the foundation, especially too while I believe that the buyer's market is still open here while it's closing. So be able to get in there, be able to maybe get some concessions from the sellers if they're still offering it, concessions from builders if you're trying to go after that. And again, buyers, renters alike, if you're looking to get probably the best values right now, new construction looks like it's it in both Ada and Canyon counties. Plus, you could probably even go to them and say, well, you know, what kind of concessions you got, etc., etc. And again, you're marrying the house, but you're only dating the rate. So even if the rate is larger than you like to be right now, you can go ahead and refinance when things eventually do come down, either due to a recession or a soft landing. But if you're looking to get that start, I know great lenders all over the Treasure Valley. Feel free to reach out to me. More than happy to put you in contact with one of them, and let's get you into the dream home that you've always deserved right here in the Treasure Valley. So I look forward to hearing from you. Well, thank you again, everybody, for taking the time out of your day to watch this video. And please call me, text me, shoot me an email, or even leave a comment below with any questions that you do have. Would also love to hear your thoughts in the comment section below on what you think is going to happen in the real estate market coming up. I'm more than responsive to that. And of course, if you're looking to move in from out of state, click in the description below, download my free relocation guide, so that way you're in the know before you decide to make the move. I do look forward to hearing from you, but before you go, please click on the subscribe button below, hit the notification bell, and if you're starting to look at cities around the Treasure Valley, I'm going to go ahead and pop Meridian at the end of this video in the end screen, so please go ahead and click on that and get a nice overview of the city of Meridian. Well, I look forward to hearing from you. Look forward to the day we speak. God bless everybody. Look forward to calling you my neighbor. Till the next video. Bye-bye.